The gem and jewelry industry is celebrating the India-EU free trade agreement. And yes, on paper it sounds massive. Zero duty access, trade expected to double to $10 billion in 3 years. This is big headlines and big optimism. But let's pause and look at the numbers properly. Today, India's exports is roughly about $2.7 billion to the EU. This is $2.7 billion of gem and jewelry to the European Union. The EU, on the other hand, imports close to $80 billion worth of jewelry annually. That means India's market share is little over 3%. So even if the exports were to double, which is ambitious, our incremental share will still remain modest. Why? Because India is not alone. Countries like Turkey, Switzerland, and soon Thailand already have or are about to have similar trade agreements with the European Union. And these countries are already strong suppliers to Europe. In fact, more than that of India's. So let's be honest. The free trade agreement is an advantage, not a shortcut. The real work for India starts only now. We need better finishing and consistency in our jewelry quality. We need a deeper understanding of the European design sensibilities and compliance, and strong long-term trust-based relationships with EU buyers. And most importantly, we need a shift in perception about the Indian jewelry craftsmanship. This is not just a 3-year story, this is a long game. The FTA only opens the door, but walking through it and staying relevant is entirely up to us as an industry. So celebrate the deal, but don't confuse noise with transformation.